Good morning, everybody. Good morning, Laura and my fellow presenters today morning. Thank you very much for inviting me onto this platform to speak on this, very important matter for all of us who are trading on digital platforms. Just to provide a little bit of a background, that it is said that by last year there was probably about $3 trillion of activity that was being traded, services and goods that were being traded through digital marketplaces. And this, includes either you're selling or services, educational programs, and everything else that can be sold through an online platform. So of course you can see that in the last 10 years, this particular marketplace has totally exploded. So I think I wanted to start off by setting that context. Locally, if you look at Kenya, we're being told that the market penetration from a mobile phone perspective is almost at about 114%. So that's almost for every 100 people, they own about 114 phones. So also a lot of Kenyans are starting to, buy and sell items on digital marketplaces. And of course, this has been, I would say, accelerated by the COVID pandemic. Anybody who did not want to either leave their houses or it was just easier to get things done online has moved online and is using those tools and technologies to buy. I know that there has been an explosion of educational material. Even our own children. This morning when I was trying to get online, I was fighting with my own children to get them off the internet. Luckily, they're on half term, so that at least I could get enough bandwidth to actually log in and do this presentation. The other thing that we have to think about is the fact that when we look at our economy, the traditional economy is pretty much moving online. And the Cabinet Secretary Treasury, issued a finance bill. And last week, we also had the budget. When the budget was read, we're looking at about 2.79 trillion, about a budget of about 2.8 trillion, let's call it that, which must be financed from somewhere. If you're going to spend all that money, we must finance it from somewhere. He estimated that he will need to get about 1.6 trillion from KRA, which is a tax that you and me pay. And then, of course, he'll then have to borrow some other money, and he'll also maybe get some grants. And of course, there's what you call the money that AI appropriations in aid, which is the money that comes from the various parastatals and so forth. But on top of all that, he still had a deficit of about 840 billion shillings that the minister, the National Treasury, and KRA have to bridge. But so going back to this 1.6 trillion that KRA has been tasked with over the last few years, I know that revenue collections have really improved. I think moving up from about, I think they were about 1.4 trillion last year. And I think this year, because of the pandemic, that number is not expected to grow significantly above that 1.4 trillion. So of course, this also tells you that there's a lot of pressure within government that to raise money. And we at the Institute for quite a long time have been encouraging the National Treasury to expand the base of who gets taxed. Because for a very long time, it's only mainly corporates. And then, of course, anybody else who has a paycheck, because pay as you earn, and then of course we have VAT and all other import duties. So and they've been trying to do that, incrementally. So for example, we had the rental income tax that came in a couple of years ago. So now anybody who owns, rental properties, I'm hoping you're already paying your rental income tax, or you'll soon get onto that bandwagon. And so, of course, the digital space, the digital market space was the next frontier. So I think in 2019, in the finance bill, the minister actually introduced, some language around this. And so it was not surprising when this came in. Of course, the key concern was that there wasn't really a lot of clarity around what was going to happen. But as we're moving along, we're starting to see some clarity. One, just being focused on the digital marketplace, which is really all these platforms, Jumia, you have Masoko, you have, those are the local ones. And then of course you have others like Amazon and all that, that are all selling products, and quite a number of others. If you look at, I think the broadness of all activities that are happening digitally, starting from services and sale of goods and all that. So the digital services tax, which has been introduced, says that everyone who's running a digital marketplace must pay at least about 1.5% of the gross revenue, gross turnover that is generated from that digital marketplace. And for the global suppliers or marketplaces, such as, I would say maybe people like Zoom, Amazon, and whoever, this is a final tax. However, for the local digital marketplaces, this becomes then an advanced tax. What that means is at the end of the year, when you account for your corporation tax at 30% or whatever percent, that 25% now, you can then offset this 1.5% as an advanced tax. Additionally, the minister also issued some guidelines that came, I believe, last week. But I think Esther can tell us. That's what she does on a daily basis. That also indicated quite a number of services that will be vatable. I have a list of those services, but I might, including things like downloading digital content, subscriptions of magazines and news and journals and all that, software programs, websites, firewalls, and all that. All those, even website hosting, all those will be now applicable to VAT. So I think it's a general growth. At ICPAK, we had actually recommended that they don't apply this digital service tax to the local companies, because they're already paying 30%. But what I've seen from some notes that have come from the Finance Committee in Parliament, and they're the ones who consider the finance bill, which is what sets the legal guidance on which you and I are taxed. The thought process is that, as I said earlier, for the local companies, this is going to be an advanced tax, so they'll be able to offset it against their corporation tax at 25% currently. But then for the international companies, this is going to be a final tax. Of course, this is a discussion that has been taking place globally. I think if you've been following, even there was a bit of a tough war between the US and France, because the US had said, rather France had said they were going to tax all the services by people like Google and so forth that were generated, all revenues generated in France. And then there was something similar going on in Australia. And I know at some point in time, President Trump had said that he was going to impose other tariffs and sanctions against France and so forth. So this is something that is being considered globally. from an OECD perspective. Of course, but of course, it looks like Kenya has decided to do this unilaterally and to go ahead, as a few other countries are attempting to do so. So I'm hoping I've provided a bit of a background. So Laura, thank you so much. Let me allow my other presenters to comment.
Thank you, Rose. That was a fantastic background, and has actually given us, some a platform for us to continue the discussion. It's very interesting to see that ICPAK had actually recommended to the government not to let this happen. And, I had actually not thought about it. When you talk about it's been a journey where, they've been adding new and new things over time, like the rental income tax. It was just a matter of time before digital services tax. And of course, the government has to collect this money from somewhere. People are trading left, right, center. Most of us have gone online. A lot of us are doing purchases, on the online platforms. And in fact, given the current pandemic, that has become the new norm. We are buying online. So, what is happening with collection of taxes with regards to all this trading that is happening online, locally and internationally. So I'll come back to you. I can already see some few questions coming in already in the Q&A window. So I'll come back to you, and then we can answer those questions.